Hello everyone and welcome back to Southern Wealth. I hope you guys are doing very well. If you enjoy the content, please consider dropping that like and subscribe. I was 2 days away for work, but now I'm back. Hope you guys are doing very well. A lot of things to go through. I think the number one, most importantly, is that there seems to be at least a bigger probability for a ceasefire plan, which is good. Now, of course, we need the other side to agree, but so far, at least we can say we are a bit closer than we were 3 weeks ago. I still believe that the TDS expands not only to the media in the US but actually to leaders in many places. The amount of things that happen, like I'll just give you this quick example in Europe, right? So Trump has been asking and demanding of Europe to invest in its own defense and military development for like 8 years. And then he says something like, maybe we just leave NATO, that's it. We're not going to be carrying the world. We're not going to be carrying the world forever. And then the European leaders go, oh, we don't need the US for anything. We'll show him we're going to build our own defense. So you're going to punish him by doing exactly what he wanted for years. Okay. Yeah, this is just, I don't know. I think just people just lose their mind. I don't understand. I mean, it's always the same playbook over and over again, but somehow it always seems to work. So I guess that's why it doesn't change it. But it's just, I mean, it's just surprising. Say something outrageous, and the people will react aggressively. Pretend to take a very decisive action. Have the people, step 3, have the people do what you wanted, thinking they are punishing you while doing it. That's it. Over and over and over again. But, we'll leave that for another discussion. Obviously, stocks have been coming down. Everybody's afraid about tariffs. So it's going to be extremely inflationary and all of these things. And the inflation numbers came lower than expected. Gas prices are at a 4-year low in the US, and oil prices are around the $65 per barrel. I think that number is likely to keep coming down. Not in a straight line. Nothing goes up or down on the straight line. But I think the tariffs will be less inflationary than people think. I always find this so curious, which is, tariffs will be inflationary, like with super certainty of the argument. The question that I ask is this: okay, China is a country with a lot of tariffs. They are facing deflation. India is one of the most protectionist economies, one of the economies with the most tariffs on the planet. They just reported a lower inflation today, lower than many countries in Europe, like the Netherlands, for example. So, but I thought it was super inflationary. So, what happened? You see, these things are not necessarily so black and white like people think. If you have the overall commodities coming down because the world is afraid of a recession, you can actually, and you start having more production internally, you offset to a big extent part of the tariffs. If you're giving tariffs to countries and you already have a backdoor agreement with a different country, let's say the US is slamming tariffs to Canada, right? But they're importing, for example, so steel that is coming from Canada or Europe, those have tariffs, but not the Japanese one. Nippon Steel is one of the largest companies on the planet. What if he's buying something from Mexico, but he stops buying it from Mexico and starts buying it from Colombia and Brazil? So my point being, yes, in some things it will have an inflationary impact, and in others it won't. So, and potentially even somewhat of a deflationary impact. My point is just this: those things are not so black and white like people write it. Yeah, the proof is, I mean, India has like some of the 3.7% inflation for India. My God, that's so low for historical, compared to other historical to its historical standard. Yet they have massive tariffs on almost everything. So to be seen. I'm still convinced that the tariffs will have less and less impact as they are discussed. I think there's a meeting between Canadian Prime Minister and Trump tonight. Maybe they come up with some sort of semi-agreement. We'll see. And it will be quite interesting to see what's going to happen. It's funny to me that other nations want Canada and the US, like they are pissed off that they are not getting along, right? And I'm like, if you're not in the US or in Canada, I'm not sure you want them to get along very much. If they actually create an agreement in the style of European Union, they become a massive powerhouse, which, if you're American or Canadian, is great. If you are not, is not so great. So be careful what you wish for, and be careful for very good relationships between certain countries. Because if they team up and you're not in any of those countries, it can actually quickly backfire you in terms of your own competitiveness in your own region. So be careful with what you wish for. Now, crypto seems to be starting to stabilize, even going up when stocks are coming down, which is good to see. Ethereum is obviously still struggling. I mean, Bitcoin's above 83K, and you can see already a bit of a mixed performance in terms of some cryptos are doing well, some cryptos not doing so well. So, but it's not like anymore complete bleed out on everybody. I think much of the selling is now over. We had our corrective period, which we've had in other cycles. I think there's a good chance the later part of the month will actually be a good part. And I think Q2 is posing to be very, very good. The reason is very simple. Liquidity was crunched down and financial conditions tightened aggressively late 2024, which caused the reaction that you've seen in risk assets, so stocks, crypto, etc. You always have a 60-day, 70-day lag, which you now saw particularly in February and March, but all those conditions have completely reversed. So liquidity is pumping from everywhere at the moment, particularly China. Germany has increased quite a bit. The US is also using its TGA account, and I think with the inflation coming down, I think really the idea is to really push the Fed to start cutting rates. I think they should have done it already. Once again, I get the feeling that they're going to do something like, drop 50 basis points or whatever, and instead of doing double 25, but they will just play catch up a little bit later, like they've done in the past. So there's nothing really surprising on that. It's just usually they're always a little bit behind the curve. So I don't see why this would be any different. So basically what we're waiting is for that. We're waiting for liquidity to start filtering through the system, to become more obvious in assets. Then the news will fill the charts. So if the charts start to become green, then it's because of A, B, and C. All of a sudden there's no more tariff worries, blah, 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 whatever you want to call it. Then all of a sudden everybody has priced in everything and everything is great, and you know it is. So the news will fill whatever is the color of the chart. If we have more red, it will show us more bad news. If we start having green, it will show us that the bad news of the past are now dissipating for some miraculous reason. And that's it. Crypto is no exception. We are in the same boat. We are very correlated with liquidity. It's more important than anything else. That's why we can have new all-time highs with all these bad things happening in Europe, in the Middle East, with high inflation, with a high interest rate, somewhere or another we end up at new all-time highs. Why? Because of liquidity, and all the rest is history and stories and narratives and news and whatever. You have a lot of things that have short-term impacts, but you don't have that many. Now, I wanted to flag something because this is very important. Gold is approaching $3,000, and there's been record imports by the US of gold. If you want to be a conspiracy theorist, is it because Elon Musk will audit Fort Knox and they're trying to replace the gold that was not there anymore? Don't forget, the last audit of those gold reserves was like in the 1950s. Is that the case? Are they trying to replace what was taken over the years to try to appear that none of the gold was lost? I don't know. I leave that up to you to speculate and to come up with theories why. Sorry. Now, as we approach $3,000, obviously Peter Schiff is very, very happy. Not just him, Peter Schiff and others like him. Now, the reason why I'm talking about him is very important. Peter Schiff talks about everything inflation adjusted. And it does make the distinction that you have the inflation of the money supply, so that's the M2 money supply going up, and you have the inflation of the CPI, the McDonald's, the groceries, etc. The other inflation, the M2 money supply, where do you see it? You see it in real estate prices, stock prices, etc. You see it in the debasement of currency. And what's the effect of it? It's not so much your grocery prices, but it's basically, okay, it used to take 2.5 yearly average salaries to buy an average home, and now it takes 10. So to buy a house, on average, an average house, you now need 4 times more money to do it versus the 1960s. So that's the price you pay. So you don't see it in when you go for a Big Mac or whatever, but you do see it when you try to buy assets. So you have the asset price inflation and you have the CPI inflation. He's correct about it. But because he's a gold bug, the second thing he loves the most is inflation. He loves inflation. World inflation, disinflation, inflation. Except one thing. The price of gold adjusted for inflation. And when I say inflation, I'm talking not just the CPI, but the M2 money supply. Why? Because gold is currently at 2,900 something. Gold needs to go to 5,400, around that, to break even, adjusted for CPI and M2 money supply increase, to break even, not to make a profit, to just break even, to be in the same place as gold was in 2011. And gold needs to go to $34,000 plus, $34,000 to break even from the 1980s top, adjusted for M2, money supply, and CPI. But if he says that to you, he has a bit of trouble selling you his funds, whose performance, by the way, is terrible. Don't take my word for it. Check it. Now, the reason why I'm talking about this is because this is a clear example of the little tricks that are used by these financial gurus to have them follow him. Basically he gets the sponsorship money, he gets the views on YouTube, maybe gets some super chats, but most importantly, he eventually convinces you to buy his funds, in which you're going to pay exorbitant management fees for the great privilege of underperforming pretty much almost everything over time. So be careful. I cannot tell you what to do. It's up to you. It's your choice. But he's just an example of these financial gurus and how can they destroy you. For example, I just watched the video of Harry Dent predicting another 90% plus market crash to happen this year and the next. Now, what he doesn't tell you is that he predicted the same last year and the year before and the year before. Basically, since 2012, he's predicting a 90% stock market crash non-stop at least once a year. But that part you're not going to see, because if the interviewer asks that question, Harry will never come back. The interviewer doesn't get views, and the interviewer doesn't make money. So he doesn't ask him these questions. He just lets him say the same things every single year, over and over again, because he's talking about fear, and he got very good at promoting fear, because fear sells. Then he makes a lot of money with it. So what I'm trying to say here is very simple. There's a lot of new investors that came on YouTube, and they listen to these guys, and then they get completely annihilated. And they fail to realize that those guys are wrong, but they're okay, because they get paid from all sorts of ways that you don't. And you get destroyed with this. Now, can I tell you you shouldn't listen? You shouldn't do it? No, of course not, because that would be giving you financial advice. I'm just saying, before you do anything based on what these people say, check their track record, because it's extremely public. And I will finish with this example of Peter Schiff. Peter Schiff has been saying, oh, the dollar index is breaking down, which means inflation is going to go through the roof, because since the US imports a lot of things, if the dollar is down, then they need more dollars to import, which means inflation is going to spike up. Right? This is the theory. What's the problem with that theory? The problem is this. Between 2010 and 2020, the average inflation in the US was 1.5%. The dollar index was on average around low 80s, like 81, 80, 82. Well below the current 103. So what happened? Where was the massive inflation? By the way, in case you don't know, he also predicted during that time that because the dollar was coming down, the inflation is going to go through the roof, blah, blah, blah. So the predictions that you see him doing now are not new predictions, are the same predictions of 25 years ago. And they don't happen the way he predicts. Funny thing, when did we have the highest inflation in recent memory? The past 4 years, when the dollar index was way above what it was back in the 2010s. So the complete opposite of what he's saying. Once again, he will not tell you that, because the idea is to scare you, and by scaring you, you end up in his channel. By ending up in his channel, you end up buying whatever he's selling you. So be careful. These people, they never stop. It's always the same story. I think Jim Rickards has, according to his prediction in 2020, we should be at gold $5,000 already. And this is not the first $5,000 prediction, because we should have been at $5,000 according to him, like as soon as 2015. So once again, it's one after the other. It's all the same stories. Sell their books, sell their newsletters, go to the channel, get the YouTube ad revenue, sponsorship fees, membership fees, go to television and speak, go to other YouTube channels and speak, sell everything, never show your returns, or don't even talk about them. Hopefully they don't find them. And living off people on YouTube and on Twitter and whatever. So be very careful with that. And with that, guys, thank you very much for your support. Don't forget to like and subscribe, and I'll catch you in the next one.